So this is back again now to the specific stock idea that I'm going to mention. But before I do so, let's remember Buffett's flight safety, the flight simulator that he bought from Albert Elswich back then in October 96 for 1.5 billion in cash and stock. So the valuation that he bought from Albert was price to book 2.5 times, P 18 times, price to sales of almost 5 times. And worse, on the day of the announcement of the acquisition, flight safety short-term earnings fell. So it's like all the bad news starts to come together for Buffett. So, and even worse, it was only the second time Buffett used Berkshire stock to make an acquisition. Back then, before that was the Decker shoes, and it was a disaster for him. So it was also, at that time, if you recall, it was Berkshire's largest non-insurance business, accounting for almost a third of the non-insurance earnings. So it was a big bet for Buffett. So try to go back by the time machine to rethink. It's such a big bet, you know. What's so interesting about the mode factor at flight safety that Buffett wants to buy it? Now, of course, flight safety is doing pretty well. So it was founded in 1951, listed in 1968, and then it took 28 years before Buffett acquired it in October 96. So during these 28 years, the mode is developing. So only when 96, when the mode is obvious, Buffett bought it. And then it took another 17 years for the value to multiply and compound even further. So his idea back then was this flight simulation is a critical business service that pilots must undergo in terms of their training. It's like taking the low bid in selecting a doctor. So that's why it's able to command high profit margin, but it's also cursed with high capex. So Buffett pointed out in his annual letter at the time that this business, unlike See's Candies or other of its operations, is capital intensive because you need to install these simulator machines, fixed costs, just like Amazon with its fulfillment warehouse centers, and then incur the fixed cost first before you get the cash flow, which is sticky later on. So it's also cursed in terms of long accounts receivables period. So why is it still a resilient compounder? As Buffett rightly pointed out, it's a critical service in solving a major problem because 65% of the airline accidents at that time, before flight safety, they are due to human errors. And then there's the emptiness factor of a bamboo innovator. Back then, when Albert was starting flight safety, it's more like one-to-one tacit training. He's able to translate that know-how in terms of training pilots into a machine-based and then subsequently into a software internet-based training, like virtual simulation. And the decades that is spent in educating the pilots in creating this new market actually cultivate a lot of trust and support from the community. So this indestructible intangibles is just like Germany's Robert Bosch. It helps fence off rival singers, Simuflight at that time. It's a big MNC at that time compared to Albert's flight safety. And this MNC at that time has far greater tangible resources. So the key idea is once this business model overcomes its high capex, like Amazon with its free shipping policy in getting that tipping point factor, this network effects, remember network effects is the category of the mode, this thing starts to kick in, customer stickiness starts to kick in, mode is obvious, but the stock has run up quite considerably. It still can run up, but wouldn't it be nice to invest before the mode is obvious? And then scalable globally recurring revenue. So now I'd like to bring to you the Korean stock idea that's similar to, roughly similar to Buffett's flight safety, which is like a culture deep-seated in Korean society. Screen golf or golf simulator, bringing a rich man's game, affordable for the masses, and it's now like 10 times cheaper in terms of price, made possible because of the technology disruption. And if we were to recall, like Buffett used to mention to us that he regretted not investing in Walmart, and and the Charles Schwab, etc., whereby these Walmarts and these companies, they make available to the masses once expensive toys and products available only to the rich, and they make it affordable to the masses. So these companies tend to be compounders. They can be Ford, Toyota, Walmart, Coach, the affordable luxury brand, Charles Schwab, IKEA, Luxottica, Swarovski, Tiffany, L'Oreal. So all these companies have been compounders because they make affordable, expensive products to the masses. So golf remains still, now in this current age, a sport only for the wealthy. It's even harder for Koreans to blow like $200-300 on a weekend round of golf when, as I mentioned, society in Korea is built upon credit cards. So it's still a credit crunch society. So when a 10x cheaper alternative comes up in golf simulation, we'll see later on how it brings out the innovator in this company that I'm going to mention called Golfzon. I'm going to play a video later on, but you can see that it's like a culture now in Korea, and it's very real because most people associate all this simulator as nice to have and very fetish kind of phenomenon. It's not real. It spoils your real actual golf. But I'll point out later on that with the launch and tipping point of the new Vision product, they finally capture the last frontier of their customer, whereby the professional golfers are using it to train themselves. So if you notice, there are more and more Korean golfers, be it from the men's and particularly the ladies, that dominate the world. So this is like a screen capture of how they use actual flights to take aerial shots of the real actual golf courses and then simulate it on their computer screen. So be it from Europe, US, and Asia, all the best golf courses that you ever fantasized about but didn't have time to travel. So it's like the real thing, you know. It even had all these replays that can correct you on your problems in your swings, etc. You get instant feedback. And then it's also leveraged into different business usage, be it in hotels, and golf cafes in Korea are a growing trend. You can do it at home, in companies, boosting employee morale. So Golfzon has hit its 10th year milestone with its mission, which is to make golf enjoyable and accessible to everyone, no matter where they live or how privileged they are. So you can see that it's come a long way since 2002 when it started up. It's so slow because by the time it went from 2002 to 2007, it's still like $27 million in terms of its sales. And then guess what? 2007 fourth quarter was the peak of the markets, be it in America or in Asia, with the Bestons as well. Shanghai was 6,000 in October 2007. Now it's about below 2,000, right? So back then, Golfzon, if you look at the chart, it's got 42% market share. So the immediate obvious reaction is, it's a dead company, a fetish nice to have, right? And then meeting the crisis, who's gonna pay, who's gonna want to buy and spend their product if you don't have the mood to want to play as well, right? And you'll be surprised, it's an indirect beneficiary of the crisis, just like the bamboo, which bend but not break in crisis. So because it's taking away market share from the actual golf courses, which takes about which costs you about $300 US per weekend at the minimum. So with a 10x cheaper alternative, you can see that sales has exploded almost 10 times, more than 10 times in the from 42% market share, it became a consolidator to double market share to 84%, as all the short-term so-called imitators of Golfzon products, because I'm sure a lot of Americans and Europeans, they are familiar with this product as well, where you see competing products and then you start to dismiss this because you see, oh, maybe the imitators are not so good. But if you were to go to Korea, go inside a golf cafe, you'll be surprised that it's got a dominant 80% market share in Korea now. So this is what I meant. It's able to grow in crisis, and now the remaining 15 to 16% market share are split quite evenly amongst 4 other companies. They used to be quite heavily contested in 2007 during the crisis, but now they've fallen so far behind because they are doing other businesses. They are not focused like Golfzon is, so they are very opportunistic. So this is the good thing about crisis. Those who are long-term and focused, they're able to consolidate at the expense of short-term imitators. So it's able to grow a loyal customer base of 1.2 million membership now, doubled from 2010 itself. It's like a snowball that Buffett mentioned. It's now like 50% of the golfing population in Korea, or more than 70% if golfers with no Golfzon membership are included. So if you were to go to Korea, in particular Seoul, Seoul is like so crowded, so stressful, and if you were to analogize, it's just like the entire population in America. You take a quarter of them to squeeze inside New York. So this is the situation in Seoul itself. So yet, because of this density, innovative services starts to sprout up, like Golfzon. So there are like 5,000 Golfzon's simulation stores, and in these 5,000 stores, there are like over 20,000 simulator installations. It has its own Golfzon Academy golf driving range as well, both directly owned and franchised. It's got its Golfzon market, offline retail market, and 5 golf factory in collaboration with the US Golfsmith and online golf shopping mall. So it's like a total golfing platform company right now. So it's come a long way because at that time it's able to satisfy a critical market gap. Because in the stressful and overcrowded Seoul, there are no golf courses, just like there are no petrol stations in New York, you know. So it's like a weird thing. To play golf, you need to drive 2-3 hours away to some rural provincial areas away from Seoul. So it's very inconvenient. So having this golf cafe is just right on spot in Korea itself. So you can see that Golfzon, why is it able to gain market share away from its so-called short-term imitators? Because it had this so-called proprietary virtual reality technology that really makes it so, this game to be so realistic like the actual one, be it in terms of the mat that they are doing, the wind conditions, the weather conditions, etc., which is something that they are short-term imitators. The products that you see available on the market that's not Golfzon, they do not provide. So it's able to study the curvature of the ball recognition, accuracy with their sensor technology. And the video that I've shown you is the tipping point, just like the Microsoft model of Windows 3.0. This vision model, which is released in February last year, is a breakthrough for the company itself. So it's something that allowed me to reconnect with the company, because initially I was just like every skeptical value investors, isn't it so, that all these are very fetish things. But this vision model that you saw in the video just now was a breakthrough, because previously, before this new model, advanced golfers, which is the professional ones, they stay away from the screen golf because there's a lack of accuracy. But it's a breakthrough in terms of capturing all 3 segments with this vision product, from basic to intermediate to advanced. So this vision model per unit price is 40,000 US, which is 60% higher in ASP than the older version. So they are able to leverage on their so-called proprietary technology in virtual reality to create a so-called advanced VR so-called experience, whereby there are like digital caddies. Previously, it's offered as a free beta service online, but now it's like a paid item, like avatars, whereby it's like a little caddy in your screen that guides you how to play properly and even better. So there's something that I observe in Asia as well. For companies that are really truly innovative, most of the workforce, half of it are typically in the R&D people, because if 30% or 50% of the tech companies are in sales and marketing, it's really like a distributor pushing products with commissions and financing incentives with long AR period, bankers just rolling over credits to them. So all these companies, they are not innovative. But for Golfzon, it's able to have the foundation of technology to scale up its offering, and then it's able to share the benefits with employee stock options or employee stock ownership of 2.3%. In particular, it's able to have this emptiness in trust and support from the community of loyal customers going to new areas. In particular, this golfzon.com website is now the most popular golf portal. But previously, before 2008, there is a dominant so-called golf website called svsgolf.com, which is the one that you go to book your actual golf courses and get golfing information. But since Golfzon came out in 2008, you can see that from 90% near dominance of sbsgolf.com, it's become zero now, almost 0% market share. So this is the power of loyal customers following you. There's 1.2 million now and snowballing. You're able to introduce to them value-added services which they are able to take on with trust. They also have this online golfing, golf shopping mall, Golfing. It's like an Amazon for golf. And as I mentioned, it's embedded into the Korean culture now. It's no longer a fad, all this golf. And recently, only last week, last Sunday in fact, Inbee Park won the New York, the LPGA Women's Championship in New York. And she's now, in this latest Forbes article, I think it's only last week, she's the most dominant golfer in the world right now, ahead of Tiger Woods, you know. So not just her, you know, but like Lydia Ko is the youngest woman ever to win a professional golf tournament at age 14, a Korean girl. And then there's the male as well, Bae Sang-moon, winning the third Korean golfer to win at the PGA Tour. Now, of course, there's Michelle Wie, that a lot of golf enthusiasts should know. 5 of the top 10 lady professional golfers are Koreans. 35 players in the top 100 are Koreans as well. So it's an amazing phenomenon. Korea is golf crazy. And you might think, so what does this got to do with simulation screen golf? So this is a recent article in May 2013 about Choi Ye-ji, this lady screen golfer, simulation golfer, who won the online simulation golf, not online, but the simulation golf tournament, and she qualified in the professional Korean LPGA Tour Ladies Open. So it's increasingly embraced and accepted. And then you can see this is another article in 2011, exactly what I mentioned, you know. In bad times, in particularly now, in crisis period, when people are credit crunch, all this golf course revenue are going down, but it's a thriving virtual game revenue. So I urge you to read the articles and watch the videos on YouTube as well. So this is like a very short brief slide about rethinking about fetish nice to have, or just like Starbucks at that time is a nice to have thing. Who's gonna drink Starbucks? You know, it's so expensive. It's a fad, you know. Or like Lululemon, the yoga wear, even Twitter or Facebook, you know, 3D printing, Chipotle, McDonald's was like a fad. Who's gonna eat all this fried stuff? Dolby IMAX, they're like a fad. Under Armour is a fad. Panera Bread is a fad. Of course, there are like things like Krispy Kreme and Heelys and Crocs that we know they have exploded, but somehow they coming back a little bit. So how to assess whether it's a fad or a Zeitgeist like Starbucks? So Zeitgeist is a German word which is like a spirit of the age and the time, where it became like a part of the social fabric and culture. So does it allow the individuality of a person to be expressed, and yet ubiquity, where it's seen everywhere, it will not dilute the quality of the expression of the image? Because for those who like to come to Asia, fund managers or investors, I know a lot of Western fund managers, they go to like entertainment outlets when they come to Asia as well to immerse in the local culture. So locally, Koreans are sick and tired of this noraebang, the singing bars and entertainment outlets, as escape zone from their stress work life, because it's the unraveling of debt excesses in consuming these expensive giddy services. They become like guilt trips. So golf simulation cafes, they offer a refreshing and healthy entertainment alternative and places to go to over the past decade in Korea, while preserving Kamyeon, which is face, is increasingly embraced by the middle class as the economic situation grows grimmer. So this is like a quote which I like by Nobel Laureate German-Swiss author Hermann Hesse. It's just like now, increasingly, as we are deleveraging from the excesses of the past, it's like we eaten too much or drunk too much, we are vomiting up. So we are yet glad for the relief, but we need alternatives like simulation golf to still give us, you know, happiness in life. So you can also have happiness in life by participating in the Golfzon simulation tournament. It's a real US 1 million prize money. So this is the founder, one of the founders, Mr. Kim. So it's able to leverage upon the emptiness in open innovation business model by collaborating with US golfsmith to co-create a new retail service in Korea. Starting in August 2011, there are now like 5 golf factories in Korea itself. So this is like a snapshot by the star rating criteria of how it qualifies as a bamboo innovator. The RES factor, as I mentioned, the risk factors from industry dynamics, business transparency, accounting quality, governance, the tipping point, valuations, and liquidity. So it's trading at 10 times, price to book PE 10.7 times, price to book 1.7 times, with an ROA of 13%. The Kim family owns 60% of the stock. The treasury, which is the company itself, owns 4%. If you do stock buybacks, employees own 2.3%. It gives a higher than the average dividend yield of 2%. Liquidity is pretty good as well, about 2 million US trading every day. So yet you might be asking, so why is it cheap, you know, despite its world-class technology and market dominance in Korea? So first is the risk of market saturation now in Korea and the new hardware sales growth to decline. Golf Cafe in Korea has doubled from 2004 to 5,000. Membership has tripled from 380,000 to 1.2 million now. So people are thinking, oh, saturation point 6,000 golf cafes in Seoul and Korea by 2015. So this means that new hardware sales growth will decline. So the key question is, given that the 1.2 million loyal customers are still playing golf, and the number of rounds they play in the golf cafe are increasing, it's called roundings at each of the golf cafe site. So the key question is, how can a business model transition and monetize this loyal membership beyond hardware sales? Because they are previously selling like projectors and the hardware, right? So how do you monetize it and change it to a business model where the more golfing rounds your customer plays, the higher your sales can be, the higher your profits can be. If not, the stock will stay cheap, right? Because you're still selling hardware. And there's like a saturation point in terms of the hardware sales with 5,000 cafe now. So if you look at the Kospi index versus Golfzon, this so-called fear has presented an opportunity for long-term value investors since its IPO in May 2011. It's almost 2 years now. So I also like to, based on my experience, to always wait 2 years for an IPO, post-IPO, because all the short-term speculators and manipulators they are usually out of the stock. So the price and the volume are more genuine. So this is something that I like. It's a discipline that I inbuilt in the search methodology. Always wait 2 years to assess IPOs. Don't be too too eager to look at new growth so-called stories. So I like it that it's down 30%. Kospi is down like actually 16%, I think. So this transition from hardware to software-based business has created uncertainty in the stock price. So back in 2008, hardware is 92% of the sales. 2012 last year is now 56% hardware contribution. So the rest are like software, 25% now. The retail business is now 16%. Others is like 4%. And in terms of software, the profit margin, the operating profit margin is higher. And as I mentioned, prior to the introduction of all this latest new model, it's still predominantly hardware-based sales and profits, but they are able to embed so-called charging fees. The more so-called rounds of golf the customers actually play using the simulators, the more the golf cafe owners who buy the hardware, they have to share the profits and revenue with Golfzon. So this is something that's not recognizable in the business model by a lot of investors who are short-term, because they just see, oh, hardware sales is going down, it's not a good company. But it's in fact growing from strength to strength because it's replacing the hardware with the software-based model. So this new measurement is based on the rounds of played by the 1.2 million customers at 5,000 sites. So there are like 12 million rounds per quarter. And then a short-term catalyst, I don't like to use that word, but a short-term catalyst in the second half of this year is that they call this network service charges, which they charge to these golf screen operators and owners. They'll be increased from about Korean won 2,000 to Korean won 3,000 when they upgrade the quality of the screen golf images to this high definition stuff. So you might be thinking, okay, wouldn't there be a rebel and revolution against this price increase? But now there's almost like 95% conversion rate from the hardware to the business, the software business model, absorbing this price increase because of the 84% dominant market share enjoyed by Golfzon. So a company with smaller market share, they're not able to do so. So another risk is that in December 2011, it actually acquired a real golf country club. So it was lambasted as having lost focus. But you can see from the analysis that essentially it's about offering an integrated golfing experience, and they acquired this so-called actual golf course at a distressed price from someone who's liquidating. And this particular Jeolla province is famous for the Korean Hanok village. I'm not sure whether you've been to this Korean traditional lifestyle kind of stuff, whereby there's also this Sanwon Lake Valley. It's very famous, very scenic, where in the autumn the leaves of the maple trees turn red, and there's a nationally renowned Seonansar temple. So it's like this Taihan electric wire was actually the one, if you recall the earlier slides, it almost went bankrupt from the Kiko Forex derivatives options that they bought. So it was an opportunity for Golfzon at that time. So another risk or opportunity you were to look at it is that the overseas expansion has been slow so far, which is something that I'm not happy as well. So to present it as bare as it is, you can see that overseas expansion has been slow and disappointing. It's still only like about 5 million US. They tried to enter Japan and Canada. Canada, why not America? Because the idea is that Canada is always having bad, cold, frosty weather. So if you were, how nice you can go indoor to play simulation golf during the prolonged winter season of Canada. So this is one of the key reasons why they entered in September 2011. In Japan, because they now have 40% market share, but it's still catching on. So hopefully, as they continue to drum up more interest overseas, the stock will enjoy more re-rating. But even so, without this overseas expansion, in my view, they're able to grow from strength to strength just based on the domestic strength alone. As they consolidate even further and the number of roundings increase further, because in Korea, golfing has become a professional career away from the rat race, and parents are now acknowledging that, oh, I want my kids to be like a sportsman. It's fashionable. It's not. It's importantly, it's possible to earn a living as a golfer now. So they are sending kids not just on the actual golf courses. They are also recognizing that simulation golf courses are a good training ground for their kids. So another risk that I didn't like about Golfzon, because I like to really dig the negatives, just like Munger, the inversion, right? Always look at the negative as well. Is that even though it's net cash situation, somehow now it's a small net debt with 10 million, but this year it should be net cash. But like a lot of Korean companies, they tend to invest the cash in investments as well. So it's typical. You have to look at the footnotes. It's prevalent in almost 100% of all these companies. But still, I was disappointed to find out that. But one mitigating factor, which is totally different from a lot of Korean SMEs that I encountered over the past decade, is that thank goodness Golfzon has business transparency in its operational data. It's able to disclose the number of roundings, the number of so-called rounds of golf that the actual customers play at the 5,000 sites, operating data, make it available and transparent to investors and to themselves as well, to be accountable. So I like that part. So it's something that companies without a transparent software-based business, they have to hide behind opaque hardware sales. There's nothing, no operating data that they can give other than, oh, I give you the quant net profit and sales figure. Okay, that's it. But we can able to work backwards to find out, okay, the operating data, you know, the trend, how is it able to derive the sales to note any discrepancy, misalignment. So some new growth drivers is the distribution business that I mentioned. They are entering into the golf cafes itself. You may think that, oh, they're competing with their own customers, but somehow because of the dominant market share, there's been no issue so far over this, and they're able to enjoy greater margins as well. So if we look at the valuation comparison, Golfzon versus Buffett's Flight Safety, neck to neck back then, October 96 numbers, you can see it's 30 to 50% cheaper. And as I mentioned, Flight Safety is cursed with long accounts receivables period because its customers are those commercial airplane operators and companies. So they got big bargaining power, even though Flight Safety is a dominant market share. Whereas Golfzon, the customers are like the operators and the actual retail consumers like you and me. So the AR days is 13 days. So that's something that I like about Golfzon. The cash flow risk is low. Then if you compare it with like the entertainment technology companies like IMAX, Dolby, and Real 3D, it's like almost 100%, 50% cheaper in valuations. If you compare it to 3D printing, I know you might find this comparison a bit stretchy, but these are like new things supposedly, right? But now it's taking off with a tipping point. So Golfzon is like 200% cheaper in valuations. You can see compared to Stratasys, bigger sales, bigger profits, but market cap is so much smaller. Compared to Korean online and PC and mobile gaming companies like NCSoft and Nexon, you can see it's also cheaper by 25-60%. So this is the shareholding structure. The Kim family owns 61%. It started co-founded by father and son. YC Kim is the son. Kim Wong-il is the father. So it's a former Samsung employee. They both started the company in 2000. They own like 61% of the company right now, and they have a 3-year lockup period from the IPO. So that's 2014 in May. So there's a question that I often get perhaps about such companies that, okay, comparing a company like Flight Safety that provides a mandated service with one that's a nice to have, I think that's a real stretch. My reply to this is that it's nice to have 1.2 million loyal customers as a foundation and community to scale further this total golfing experience, and the tipping point of this new vision product launched in February 2012 after years of piling the foundation while all the short-term imitators has withered away. It has captured this last frontier of customers, the pro golfers using it as a training tool, the parents, the anxious parents, the loving parents, like Inbay Park's parents, using it, to train their children to be next champion. So while Flight Safety is a critical must-have, it faces fewer powerful customers, long AR period. So IMAX, Starbucks, etc., Adobe, they were nice to have until loyal customer base forced and entrenched skepticism amongst powerful incumbents to shift, etc. And I like how Seoul is so stressed and packed. So you need to drive 2-3 hours away to play golf, but in Seoul itself, with convenient, accessible golf cafes like Starbucks, we just pop in, You don't go to the nori bars, singing outlets anymore. It's a good trip. People want something sporty, refreshing, and yet preserving for their faith. It's still considered upmarket at affordable prices, upmarket service at super affordable prices, 10 times more affordable. So I also like the total dissemination of once dominant SBS Golf website. So importantly, as I mentioned earlier, all these Shabo raised, right, from SK, CJ, all these tycoons expropriating cash. Korea's, you can't escape from investing in Shabos, but Golfzon provides an alternative because a lot of Korean companies, they cannot escape from the big shadows of the mighty Samsung and Shabos unless you can offer something unique, genuine, authentic, and is embraced by millions of loyal customers, just like Golfzon. So a summary, one, it's got this resilient and scalable business model in wide economic mode with a dominant market share of 84%, emptiness and intangible asset in the virtual reality technology with the trust and support from its community so that they can scale into retail and online business. Valuations is at 10 times. Return on assets. I don't like to use return on equity because it's playing with leverage, debt ratio. So return on assets, the pure measure, the crude measure is 30%, which is pretty good. Catalysts, there's some short-term catalysts. There's an increase in ASP this second half, and actually it's better than expected adoption rate of the new vision model that you see in the video earlier. Better than expected retail business as well. The online digital content sales is better than expected as well. So I like how people still don't like stock. They don't like the business because they don't understand it. Because this transition from hardware to software provides a contrarian, controversial opinion for value investors who are long-term to take on the short-term traders. So typically I find, and empirically, it takes 2 years for the effects of a business model transition or a major acquisition to kick in. So February 2012 was the vision model, right? And then January 2001 was the first transition from hardware to software-based business. So it's roughly around this time now that we are starting to see, this tipping point effects to kicking in the revenue and profits exponentially, a bit like the Amazon and Microsoft earlier. So key risks are overseas expansion might be slower than expected. Capital allocation decisions might be poor. Thank you very much for listening to the presentation of Bamboo Innovators on Golfzon.